Hey there, Wicked Title folks. This is Cheryl, and I am here today with Jonathan Wilson, the CEO of FinCEN Report Company. And we are talking about, you guessed it, FinCEN real estate reporting. Jonathan, thank you so much for being here today.
Thank you so much for having me, Cheryl.
So, I think one of the most burning questions that I've got for you is like, what are you hearing from agents now that the rule is live? What are they struggling with the most?
Sure. Well, I think there are a lot of agents out there that did a great job of reading the materials and getting up to speed. But there's also a good number that we're sort of hoping this would go away. And we're kind of waited until yesterday to start getting up to speed. So there's still a fair amount of confusion. Um, I suppose one of the biggest challenges is that so many agencies haven't thought through the workflow process. They're aware that for a reportable transaction, they're going to have to fill out a form. Most everyone has their favorite PDF that has pretty much all the right fields on it, but they haven't thought through the process of how do they evaluate whether a transaction is reportable. If a transaction is reportable, what process do they want to follow to collect that information? Are they just going to send off an email to the seller and the buyer and say, tell us all this stuff? Inevitably the sellers and buyers are going to have questions. How do they plan to answer those questions? And then once they've collected all the data and they've filled in their favorite form, who actually is going to validate that and make the decision to decide to file? Because as you know, under the rule, it is the reporting person who is responsible for the accuracy of all the information in the report that gets filed,
Yeah.
except for those fields that are actually the subject of an appropriate reliance certificate. So if your process includes obtaining a reliance certificate from the seller as to the seller's information, obtaining a reliance certificate from the buyer as to the buyer's information, then all of those fields are effectively covered, if you will. And you, the reporting person, only are truly responsible for those fields that aren't the subject of a reliance certificate. And I think those sorts of details, not everyone has thought all the way through.
I've been seeing that too. I've been kind of jumping in and out of some of the different Facebook groups and online forums where title people are chatting with each other. And I think you've got that group of people who just buried their head in the sand, hoped it would go away, and now they're playing catch up. You've got the people who kind of dove in and they have a functional understanding of the law. But yeah, I think there's an awful lot of confusion around, well, great, how do we actually implement this? We know what we need to do, but how are we going to do it? And I'm seeing some scramble around that at this point. A lot of people asking for like checklists, people talking about email templates, and some really great conversations happening. But yeah, definitely a lot of work to be done still.
Sure. We had a question come in just this morning here at the FinCEN Report Company where the title agency had started the order yesterday and were letting us know, oh, the buyers have questions about how they're going to answer all these information requests, and we're going to have a call with them later today. That's great, but are you planning to do that every time you have a reportable transaction? That's not really very scalable. In a well-designed process, you would already have some kind of educational material or some kind of workflow, online system to guide the buyer through what the questions are and what they mean.
Yeah, absolutely. And even just from the perspective of building business processes and things like that, it can be really helpful to do those one-on-one calls for your first couple of transactions to really get a
Mhm.
feel for where people struggle, and that's going to help you put together a workflow that's going to be really effective and really efficient. But you're right, that's not a long-term strategy. I couldn't imagine having to do that with every transaction, especially if you're a high volume working with a lot of investors and things like that, where you're going to be filing a lot of FinCEN
Yeah,
reports.
you can't educate the world one person at a time.
That's definitely not efficient.
Yeah.
So where else are you kind of seeing people struggle or even misunderstand what it is that they're required to do?
Sure. Well, so it really is all over. We had a question yesterday from a title agency who was asking, how do we figure out who the beneficial owners are of the seller? So what do you mean? You don't need to report the beneficial owners of the seller. You only need to report the beneficial owners of the transferee entity or transferee trust. Oh, okay, great. We don't have to do that. Uh,
Yeah.
there was also a question about timing. Someone had a closing coming up and they were freaking out. Oh, we have to be ready to file at the time that we have the closing. It's great if you can file at the time of the closing. If you're the reporting person, you definitely want to make sure that your buyer and your seller don't leave the closing table, when we still get together face to face, until you have all the information you need to file that report. But the report isn't actually due at the closing. You usually have until the later of 30 days or the last day of the month following the month when the closing happens. So here we are, in early March. Any closing that happens in the month of March isn't due until the end of April. So
Yeah, and it's nice to have that grace period, but I could also see title companies getting into a lot of trouble with that grace period. Just looking historically at how they handle policy preparation and even recordings, and sometimes once that the ink is dry, it's kind of out of sight, out of mind, and people forget and they don't follow up and they don't prioritize that part of their workflow. And you could be facing really big penalties if you don't file in a timely manner. Can you tell me a little bit more
absolutely.
about the potential penalties if somebody doesn't file on time?
Sure. So in a transaction where a report is due, failing to file the report, could potentially be a felony. If it was intentional. If it wasn't intentional, what makes this regulation a little bit unique is that they don't actually spell out what the penalties could be, but it could be in the thousands of dollars under the general authority that FinCEN has under the Bank Secrecy Act, which is the statute under which these regulations come up. So you're looking at thousands of dollars, but even more importantly than that is the time, the mind share, the defense costs. And if you're
Yeah.
the reporting person and you're responding to some sort of civil investigative demand or even some sort of civil complaint, you're going to spend a lot more in legal fees than you're ever going to pay in fines.
And it's probably not just one transaction. If you have kind of fallen down on the job of keeping up with your post closing obligations, then by the time it comes to light that you failed to file one, you've probably failed to file 10, 20, 100. And those penalties really can compound at that point.
Absolutely, and that's why I brought up the subject of workflow.
Yeah.
It's one thing to have, as you say, a functional understanding of the law. It's another thing to truly appreciate what the workflow of each transaction is going to be, and to design it in such a way so that you don't put yourself in a position where you could miss a deadline.
Yeah,
If
absolutely.
obtaining reliance certificates from all the relevant parties is something that is on your closing checklist, that's a good step to have in place to make sure that individuals don't leave the closing table until they have signed off on all the certificates that you're going to need for when you file your report.
Can I also point out, 'cause it's really not something I've seen anybody talk about, but those reliance certificates, you need those on a transaction where you don't file too.
You
Because
agree?
if you
Mhm.
have relied on that information to determine that you don't need to file, you're going to want that paperwork, because if somebody ever questions and thinks that you should have filed and you didn't, you're going to need to be able to back up why you made that decision to not file. And I don't see anyone talking about that, but it's just as important as when you do file.
You're absolutely right. And actually, we have been talking about that at FinCEN Report Company. Most of the so-called solutions that are out there are all based around pulling together the information to put in the form to be filed. But they miss the most important and actually the riskiest part of the workflow, which is the evaluation. How do you
Yeah.
decide which transactions are reportable and which are not? That's actually one of the services that we provide at FinCEN Report Company. For a rather small fee, we will put you through a process that evaluates every transaction that you have and give you a yes or no. Is it reportable or not? And if it's not reportable, we will give you a certificate that says that we've reached that conclusion. And that certificate is backed up with a $10,000 guarantee so that if you
Wow.
get sued or are the subject of a civil investigative demand, we will pay the first $10,000 of your legal fees to defend that decision not to file, assuming all the information that you provided was true.
That is huge, because I tell you what, I've been updating all of my materials and educational information around this rule for the last week plus. And I have literally spent entire days writing an article around two words: real residential property. What is that?
Hmm.
And then,
Hmm.
non-financed. What is that? It's not as straightforward as it seems. There are
Absolutely
carve
true.
outs and exceptions and, definitions that maybe defy common sense,
Hmm.
uh, to make these determinations. So, yeah, I think that's a critical part of the process that really does open title agents up to a lot of liability if they don't thoroughly understand how to vet that file. And they have to vet every single file they have.
Exactly. So when I've had these conversations with smaller shops, they say, "Well, I understand the rule. I've got a really sharp paralegal, and she's going to decide which one's reportable." So that's great. I hope that particular employee works out as well. But you need to be prepared for that employee to make 0.0% errors if
Yeah,
you're really going to rely on it. Or you need to have a process that's been validated that provides you support, and that's what our evaluation system was designed for. But
yeah,
just to give you an example of some of the carve-outs you talk about, residential real property, right? So it is a multi-part definition, one of which is a building that is designed for habitation by five or fewer families. The word is designed for. You could have one house with six families living in it,
right.
unusual but not illegal. And that doesn't make it no longer residential property. It's still
Yep.
residential property, just happens to be occupied by five. But if it is a building that is designed for habitation by six or more, that is not residential real property. That's multifamily.
Yep.
And those sorts of distinctions, can be a little hard to tell when all you
Yeah.
have as the title agent is a purchase agreement and a survey. How many habitations are really intended for that building? You don't know. And that would be, to follow up on your point, an ideal time to introduce a reliance certificate from the seller. I'm the seller
Yep.
of this property, and it is a property designed for habitation by so many families. Fill in the blank. Now you can rely on that reliance certificate if you're the reporting person in your decision not to file.
Yeah, absolutely. And there's so many different scenarios, when you get into mixed use properties and, even vacant land. And, most people are not going to stop and think vacant land qualifies as residential. What are we putting up, a tent? But yeah, you really have to have those
Absolutely.
questionnaires down pat so that you've covered all those different situations.
You do. I have a whole chapter of my book devoted to some of these hard exceptions. I grew up in Eastern Pennsylvania. In fact, you did as well. And you've
Yeah.
probably seen some of these barn rehabs. You get
Oh
this
yeah.
beautiful 19th
They're
century
great.
barn, right? And you turn it into a house.
Yeah.
Well, what if Jones is selling the barn to Acme LLC and Acme LLC intends to turn it into a house?
Yeah.
Is it residential property at the time it's sold? No, but the rule depends on the intention of the buyer. So
Yeah.
unless you know that intention as the reporting person, you're not going to make the right decision. You would want to have a reliance certificate from that buyer as to their intentions of that property.
Yeah, absolutely. It really does get complicated, even non-financed. Again, at the surface, somebody's going to look at something saying non-financed and like, cool, only cash deals. But that's really not the case. It's not just cash deals. There's so many different scenarios that can play out that make it reportable.
That's right. It's non-financed by a loan that is secured by a loan made by a lender that is subject to anti-money laundering, countering foreign the financing of terrorism regulations, AML-CFT.
Yeah,
Now, all of your regular banks and credit unions have those AML-CFTs obligations. So any of those traditional banks, credit unions, savings and loans,
actually,
those
not
those are
all of the
lenders.
credit unions. That
Not all
I
credit
learned
unions.
that one this week.
Ooh, you'll have to write to me
Not,
about that one because I thought I looked that one
yeah,
up. That was another
yeah.
chapter of the book. Yeah.
Yeah, not all credit unions. They have to be, a member of the National Credit Union Association. There's a
NCUA.
lookup
Uh-huh.
tool, but yeah, most
Ah,
most credit unions are going to fall under that AML requirement, but not all of them. And that's again one of those places where that's obscure.
that
It
is
it's
obscure.
not. Yeah, it's not obvious. So
Uh,
yeah,
but
it's really
an
amazing.
even better one though is just an LLC that makes a loan. If they're not in the business of making loans,
Yeah.
you could have a secured loan not be by an AML CFT lender, and that would be
Yep.
a non-finance transaction. Yes.
Absolutely. And you end up with deals with lenders that you've never heard of. How do you know? How big are they? If they're not one of those household names, there's really no knowing at the surface whether or not they're going to fall under those rules. So you're also going to need reliance certificates from your lenders.
That's exactly right. And that's one of the tools that we have inside our evaluation system. If you're using us to evaluate your transactions as reportable or not reportable, and the questionnaire brings you to the part about the lender, tell us about the lender. Is it subject to AML CFT obligations? No, it is not. We actually generate that reliance certificate for you that is specific to that use case.
Oh, that is fantastic. Because
Mhm.
yeah, getting a reliance certificate from a lender, I think could be a little challenging sometimes too.
It'll take a minute. Yeah.
Yeah, yeah, absolutely. Yeah, there's just so much nuance to this, and it really amazes me because the rule itself is only 12 pages.
Mhm. Pretty short.
Only 12 pages, and I've certainly written more than 12 pages about the rule, and I'm sure you have as well. Um,
Absolutely. Absolutely.
how many pages is your book?
So I just released the third edition about a week ago, and I think it's 139 pages, including all the footnotes.
There you
Relatively
go.
short, relatively short. Yeah, but it's available on Amazon.com, and I spend a little bit of time. So here's another thing that I think folks will get hung up on. Assuming you have a reportable transaction, you have all the information, the reporting person is supposed to disclose the beneficial owners of that transferee entity. Now, the rules for determining beneficial ownership are referring back to the Corporate Transparency Act, something that was
Yeah.
a big thing 2 years ago and everyone has kind of forgotten about now. They're actually quite complicated, right? For your average LLC, you need to look at both beneficial ownership by virtue of ownership percentage, as well as beneficial ownership by virtue of substantial control. This is a whole chapter in the book. I wrote
Yeah.
another book about the Corporate Transparency Act. You can spend a lifetime talking about
Yeah.
beneficial ownership. If you're the reporting person, you're probably not going to be that well versed in those details. So that's something
I think
else.
a lot of LLC owners are not well
Oh, I
versed.
know they aren't. I know they aren't. Back in the day, I was in my law practice was getting calls from Swiss bankers who had ultra high net worth clients that own dozens of LLCs, and they're like, we need to get a legal opinion as to beneficial ownership, and
Yeah.
that's what lawyers do. But that's something where when you're the reporting person, you really want to be sure to get a reliance certificate from that transferee entity as to the accuracy of who their beneficial owners are, because you don't want to have to make that legal decision on your own.
Oh yeah, absolutely. And yeah, you're gonna run into LLC owners who don't know how to answer the question. They don't understand what a beneficial owner is. A
Mhm.
lot of times, especially in real estate investing, and you're flipping houses. It's you aren't necessarily dealing with people who are in the business of owning businesses. You're dealing with people who are in the business of swinging a hammer and repairing a house, and they happen to own a business in order to do so. So yeah, I think there's going to be a lot
Absolutely
of hand
true.
holding in these
Absolutely
situations.
true. And even if you've heard the phrase beneficial owner before, you probably heard it when you first set up your bank account and you
Mhm.
get your KYC form from the bank. But the definition of beneficial owner for the regulations that banks apply is not the same as the definition of beneficial owner under the Corporate Transparency Act. So
Yeah.
it's tricky stuff. Get a reliance
Yeah.
certificate.
Yes. Yeah, that reliance certificate really is key to the whole thing. It definitely removes a whole lot of liability. But it doesn't mean it's removed all of it. And I love the fact that you're backing up that decision with insurance because I'm sure our E&O policies have not caught up with the change. And I'd hate to see, if a claim went through an E&O policy, how that would play out. Because they may not even be aware that this is a new regulation and it puts new liability on the title agents. So those policies may not have really thought this through, and that could be a fight.
I would not be surprised if in the next few years there are a few enforcement actions that lead to insurance claims and that gets litigated. So in
Yeah.
5 or 6 years, we'll know the answer.
Yeah, unfortunately.
Yeah,
And yeah, somebody's going to be the scapegoat in that.
that's right. So don't be the scapegoat. Take care of
Yes.
yourself and adopt a valid process now that
Yeah,
gets you
and
insurance for these.
document the
Yeah,
process. That's true for all of our processes. Every title agency should have documentation on all their processes and procedures. A lot of them do not. And this is definitely a place where you need to have those processes documented to be able to back up any potential claim.
absolutely true. Well, one of the points that I make in the book is, let's imagine in the worst possible case, you're a title agency, you've done a few hundred of these things, and lo and behold, you got several wrong. So there's an enforcement action that looks at every transaction you've done. And
Yeah,
oh my goodness, there are dozens that you got wrong because you didn't have a valid process.
yeah,
You could be, because there are so many of them that all went wrong the same way, looking at a felony charge for violating the Bank Secrecy Act. You're going to have a lot of different legal arguments, but one that would really help you is that you had a compliance policy and a written documentation of your workflow that for some valid reason just didn't happen to work. The
right.
Department of Justice actually has guidelines for determining criminal culpability when the defendant is a corporate entity like your title agency. And one of the key defenses you have is a valid compliance program in place. If you
Yeah.
have that documentation and you're actually taking appropriate steps to try to enforce it, that is a huge benefit to you if you ever get that far down the road that you're negotiating with the Department of Justice over some kind of settlement of a criminal allegation.
Oh yeah, absolutely. Because then it changes the whole conversation from, outright negligence to intent and misunderstanding. And yeah, they're going to go a lot easier on you if you can show that you had the every intent of following and enforcing the law, and you just didn't understand properly and made a mistake. That's going to go a whole lot better for you.
Absolutely true. Very true.
Yeah. Yeah. Wow, so many different elements to consider with this. And let me just tell all of our watchers, I will include links to both Jonathan's books in the show notes. Um, so if you want to pick those up, they'll be available. Um, so what else have you kind of been fielding phone calls from agents this week? What else has kind of cropped up?
I'm trying to think of some more tangible examples. The phones are ringing off the hook. We have
I
found,
bet.
quite a few folks that were hoping it would pass away and are just now getting started. I gotta say the biggest ones are really the workflow ones. Uh,
Yeah.
People are just now beginning to comprehend all that they have to do and are beginning the process of thinking this through. Um,
Well, so then let me ask you, do you think manual reporting is going to be a sustainable long-term solution for title agencies, or are they going to really need to have software integration and automations in place in order to do this efficiently?
Yeah. So uh, a no and a yes. I don't think that manual filing is going to be very feasible for most folks. Uh, First, the evaluation aspect of this, I don't think it works very well manually. The
Yeah,
filing aspect of this, uh, I suppose you can do it manually, but it takes up an awful lot of human hours just to take the document and upload it and log into the stinking FinCEN BSA e-filing system and
yeah,
so on. It's just not very convenient. An online reporting system saves you an awful lot of time and money. Now, I wouldn't put quite so much effort around the integration piece. If you're using a particular piece of software to prepare your closing statements, to prepare your other deliverables for the closing, they don't really necessarily have to be integrated with your FinCEN reporting system. It's helpful, it's not absolutely vital. What is
yeah. I
vital,
could see
though,
that,
yeah.
especially if you're using a FinCEN filing system that is allowing you to gather information from the parties directly.
Mhm.
Then it doesn't matter if the buyer and seller have typed in information that you already have in your title production software. It's their labor, not yours. So yeah, I don't see how that really would hurt your efficiency
Yeah.
having
Well,
separate systems.
where integration helps you is with the basic information: buyer name and address, seller name and address, property street address, property legal description.
Yeah,
That's great.
Yeah.
All the rest of the stuff that you need to file the FinCEN report includes payments, wires, beneficial ownership analysis of the transferee entity. Most of that you're not going to have in your closing prep system.
Right. Yeah. Because you don't need it for anything else. So,
Right.
yeah.
Where the FinCEN filing system helps you, first in the creation of the Reliance certificates and the collection of the signatures on those things. If you have to do every Reliance certificate as a Word document on your computer, now you're really burning a lot of time. If you have a
Yeah.
filing system that does that stuff for you, you save a lot of time. Next,
There's also a cybersecurity element to that as well. You know, if people who, yeah, have a manual process and they're using Word documents or PDFs to collect information, let alone then submitting that information, you know, you don't want to just do that through email. Even if you have secure email, odds are your customers don't. So yeah, it really is critical to make sure you've thought through the cybersecurity element of your process as well.
very true, very true. So there's the creation of your Reliance certificates. There's the storage of the Reliance certificates. Remember, if you are the reporting person and you're relying on that Reliance certificate for the truthfulness of the data, you have a 5-year data retention obligation with respect to that stuff. If you're
Yeah,
doing it all on your own hard drive, who knows what system you have to make sure you keep it for 5 years and not longer. If you have an online filing system, we have tools to make sure that all that stuff is automated. Then
yeah,
you get to the cybersecurity, you're absolutely right. The worst of all possible worlds is that you collect that information, you have a data breach, and now you're liable for having let that data get out into the clear. At
yeah,
FinCEN Report Company, all of our data is encrypted. Our system is built on an encrypted system provided by Amazon Web Services, which is about as secure as you can get. We're a SOC 2 Type 1 certified platform for confidentiality and data security. So we take that very seriously. Um, we file that report for you in the reportable transaction scenario, and then we save a copy of the report along with all of your Reliance certificates. So if the stuff ever hit the fan and you needed to come up with it, you simply log into your portal at our system, and it's all right there for your defense, and you're ready to go.
yeah. I don't know if this is something that you've kind of explored yet. I haven't heard anything about it, but that 5 year record retention requirement,
Mhm.
I wonder if there's going to be any conflict with state retention requirements. And being in Pennsylvania, I'm most familiar with our requirements here. In
Ooh,
Pennsylvania, title companies have to maintain their title file records for 20 years.
wow, wow.
Yeah. And so I do wonder,
Hmm.
you know, kind of how this will play in because it's not technically a title requirement.
No,
So, yeah, I'm not sure that anyone's really addressed that. Do you have to then keep your information for 20 years because it's part of your title file? Certainly something for anyone in a state that has those kind of retention requirements beyond 5 years. Check with underwriters, see what they're saying about it.
check with your state law. Yeah, as far as the federal law is concerned, it's only 5 years and it's
Yes.
only the Reliance certificates. It's not the other stuff.
Yeah.
If your state says that you need to keep things longer, that would be a matter of state law, and that's not my area. Yeah,
Yeah, yeah. So yeah, for anybody listening, make sure you've double checked your state requirements just in case they differ, because yeah, it's so many angles to consider. So Jonathan, I got another question for you. What should agents be looking for when they're evaluating a FinCEN reporting solution? And what might be some red flags for a solution that maybe is not their best option?
sure. So obviously I've got a dog in this hunt, so I
Yes.
have an angle. But I think that the most effective solutions are those that are entirely digital and built in the cloud. If your solution involves printing something, emailing it, and then scanning it, you've already got multiple points of failure staring you in the face. So
Yeah.
have a solution that is entirely digital and in the cloud. Next, I would want to ask the solution provider, is your system encrypted? Is your data encrypted both at rest and in transit? If it's not, then there's that cyber liability piece. Next, I would want to know who was it that designed the workflow? Was it a software developer or was it someone who had legal expertise and really understood the law? I think that
Yeah.
because at its heart, this is a legal requirement that we're all trying to comply with. If you didn't have legal guidance involved in the development of your system, I would be a little bit worried about that. I would
Yeah,
want to
yeah,
know
I
that.
totally agree with that. I've seen other software systems that have been uh, designed by software developers and not by the people who use them day to day, let alone that legal input for something like this. And yeah, it definitely makes a big difference, both in your usability and in how well it's overall going to achieve its goals.
That's right. And it's tough because, you don't want your lawyer to do your software development, but you also don't want your
Yes,
software developer to practice law. You really need to
yes,
have a team that includes both. And
yeah,
that was at the heart of our effort. But yeah, and especially because so many of these words in the process have a really carefully defined meaning. It
yeah,
would be quite feasible for a software developer to say, "Oh, residential real property. I think I know what a house looks like," and they completely
yeah.
missed tons of nuance and potential for misunderstanding.
Yeah, absolutely. And just even from talking to you and some of the things you've told me about what your company is doing, to me, would certainly throw up a red flag if I was evaluating a few of your competitors as well. The fact that you are providing insurance to back up that decision point, I think is huge. And I think, if you're looking at somebody else and they don't offer that, then walk away.
Yeah, not only insurance for what they do, but also insurance for their own cybersecurity. We have our
Yes.
own cybersecurity insurance policy,
Yeah.
and that's part of what the SOC 2 Type 1 certification deals with, that we had our entire platform reviewed by a third-party CPA firm to ensure that we had valid systems in place for confidentiality and data security. Not everyone has that.
Yeah, and I like the fact that you're offering the ability to use it for that decision making process, even if the answer is no, you don't need to file. And so I think again, if you're evaluating multiple solutions, having a solution that's going to help both with vetting every file that you have at a price that's affordable, as well as then helping you actually file when you need to, is really a key part of that, because if you're just relying on your own staff, it opens you up a whole lot to risk and liability, if you have not trained thoroughly, or even if they just forgot something, because there's so much detail to consider in that decision
That's
making
right.
process.
Yeah.
So I
At the
think
end of the
that's
day, everyone is going to make a mistake
yeah,
somewhere in their lives.
yeah,
So you don't try to mitigate that risk by training people to never make mistakes. I think
yeah,
that's a fool's errand. Instead,
yes.
you build a system, you develop a process that supports, catches, and mitigates the impacts of those mistakes. And that's what we've tried to do.
So when somebody's using your system, what is it going to look like? We've talked about that decision making process. So when the answer is yes, it needs to file. Kind of, what does that look like? What's that process? How much effort is it on the part of the title agencies? How much time is
Mhm.
it for the title agencies to then, take it through the rest of the process to gather all that information and file
Sure.
out the actual report?
So we built this system over a year ago, with the assumption that there would be different types of customers that have different processes, and it wasn't our job to compel our customers to do things a certain way. Instead, we wanted to be as flexible as we could be to accommodate different workflow processes on behalf of customers. So we can work with a customer in many different ways. At one end of the spectrum, which I think is the most effective, is for our customer, the title agency, to have its own account inside of rrereport.com, where for each transaction, they create transaction. They then run through the evaluation module, which gives them a reportable, not reportable outcome. If it's reportable, you then come into the next reporting module, which says, okay, here's where we start to collect information. You then collect that information from the seller and the buyer. If you want to use our system to do that, you can. From inside the system, you can actually click a button and we send out an email to the seller and another one to the buyer that says, in connection with title agency's work, we need you to come online and enter this information. They don't have to create a username and password. They click on the link and they can then directly key in all of their information. Now, you as the reporting person, you see that information. You have the ability to edit it if you need to. And at the end of the process, we show you this is what your report is going to look like. And when you're ready to file it, you press the button and we then electronically file that report for you. So that's the method of engaging that I think is best, where you are actually using our system online in the way that we developed it. At the
Sounds like the
opposite,
time
yes.
effort in that scenario really is going to be pretty low on the title agencies. It sounds like, entering a little bit of contact information for the parties involved, clicking a couple of buttons, a few minutes to review information and approve, and they're kind of on their way.
It really should be a 5 to 10 minute exercise. I think that most of the time is going to be reminding your sellers and your buyers to do what they got to do. But isn't that what you're already doing anyway, right?
Absolutely.
Yeah,
Yeah. That's just
90% of every
another day
closing is
added on.
reminding everybody else what they need to do.
Yes.
Yeah. But so that's the one end of the spectrum where you're actually engaged in the system. You have your own account, you're using it online. At the other end of the spectrum are for those title agencies that have their PDFs that they like, they've gotten married to, and they're going to send their PDFs out to buyers and sellers and then get them back. If you want, you can engage with us and we'll take your PDFs. You have the ability to upload them to our system. We extract the data, we put it into the system, and then show you what your report's going to look like. Again, at the end of the day, you still need to press a button to file, but we're able to ingest that data from whatever data collection system you have adopted. Now, I think that's less efficient, but if that's the way you want to work, we're happy to work that way with you.
Yeah, yeah, definitely less efficient because it would then be incumbent on the title agent to kind of do a side by side comparison of what's the data that you pulled out of that document and double check and make sure that there were no mistakes and that everything that was in the document has shown up in your system with accuracy before they click OK and submit that report.
And even more importantly, if your data ingestion process involves the PDF that you sent out to a customer, if you haven't already done the education or provided a user guide and the customer says beneficial owners, oh, that's Larry, Moe, and Curly. That might be correct. It might not be correct. We don't know how accurate that customer guess is.
Yeah, yeah, and and I think that that educational piece it is really also critical to that compliance. If you ever need to defend your actions and what you've done in your file, to be able to show that you have provided some sort of education to the people that you're asking to fill out those forms, I think also is going to go a long way towards showing due diligence.
Yes. And so here's I wouldn't say it's a nightmare scenario, but here's an enforcement fact pattern that I think will come up in the next few years, and I'm interested to see how it turns out. The reporting person who files the report is responsible for all the data, except for those data that are subject to a reliance certificate, so long as the reporting person doesn't have information that the information in the reliance certificate is untrue. Okay. So Cheryl, you're the reporting person. You have a closing. Acme LLC is your transferee entity. You get a reliance certificate that says that the beneficial owner is Larry. But at the closing table, you collect a copy of the operating agreement, and it says that Mo and Curly all have a third of the LLC. Now, you ought to know that under the Corporate Transparency Act, if the LLC has three owners and each owns a third, there are at least three beneficial owners, Larry, Mo, and Curly. But your reliance certificate says that only Larry is the beneficial owner. You file the report, you say that Larry's the only beneficial owner. DOJ comes and knocks on your door and you say, here's my reliance certificate. And they say, but Cheryl, you collected the operating agreement that says that there were three beneficial owners. You should have known better. Therefore, you can't rely on this certificate. Therefore, you are liable for
Yeah.
this information in your report. Are the title agents that are out there going to have a system to double check some of the accuracy in these reliance certificates or not? That's something that I worry about and something that I try to educate customers about to be sensitive to that.
Yeah, that's an excellent point because, yeah, you may be collecting that information in other parts of your file for other purposes, and you have to make sure that you've connected the dots and realize, oh, this is pertinent over here too. And so, in that scenario, if somebody has realized it, that they have more information than what was reported to them. They would then be responsible for going into your system and entering those additional beneficial owners, or do they have to go back to the seller and make them or buyer, whoever reported, make them correct the information themselves?
And so an example of where we are flexible enough to work with you. If you wanted to, you could enter in that Larry, Moe, and Curly, all three are the beneficial owners in the report, and you press the button and you file and you take responsibility for that.
Mhm.
If I were the reporting person, though, I would want to get my buyer to correct the reliance certificate so that it is accurate. And in an ideal situation, if you caught that kind of a discrepancy, raise your hand and say, no, Mr. Buyer, that this is not accurate. We need you to redo your reliance certificate so that it correctly fixes whatever the problem is, and then re-sign it and keep the correct one. That
Right.
and it would be the ideal way to handle that.
So if you were that title person, you went back to the buyer and told them, hey, I'm looking at your LLC documents. It says that there's three people. And what if they kind of stand firm and refuse to update? I would think, and please correct me if I'm wrong, that it's then on the reporting person to include that additional information that they have in their file in the report.
Yeah, so I would hope that these scenarios are rare, but
Me too.
the law requires the reporting person to only submit accurate reports. You're not allowed to lie because the customer really wanted you to. That's not an
Right.
excuse, right? So if in that scenario you know that the beneficial owners are Larry, Moe, and Curly, Larry is insisting that he's the only one and he's not going to sign anything that says anything contrary. You can either go forward with the closing, file the report with the correct beneficial owners as you believe it to be, notwithstanding Larry's reliance certificate, which you think is false.
Right.
Or you could simply refuse to close. Say, I'm
Yeah.
not comfortable. It's a felony if I submit false information to the government. Larry, you just need to find someone else to do this closing for you.
Yeah.
It's
So
hard to
what if
say
that
no to a
comes to light?
customer, but that's what the law requires.
So what if you didn't catch it before you did the transaction? You've submitted that report, and in your post closing, you realize that there was that disconnect between the reported beneficial owners and the paperwork that you have in your file. Um, can you file an amended report with FinCEN? Do you have to file a suspicious activity report?
You do have the ability to amend your report. To be honest, off the top of my head, I'm forgetting exactly how much time you have to file the amendment, but there is the possibility to file an amendment. You might need legal help if it's more than a little bit of time. Um, so I can't really address all circumstances, but that would be a good time to call your lawyer if you find yourself in that situation. What you definitely do not want to do is forget about it, close the file, and hope it goes away.
Yeah,
Don't do that.
definitely.
Yeah.
Are you familiar at all with the suspicious activity reports? That's usually part of the AML, but could a title person end up in a position where they have to file one?
I am familiar with suspicious activity reports. I haven't researched the particular use case that you're describing, where there
Okay, yeah,
is
I
a
haven't yet either.
where there is a real estate report. You learn that it's false, and then what is it that you need to do? Apart from amending the report, I don't know that a SAR would be the way to go with that. But that's something we could definitely look into.
Yeah, I think we probably both should. And if nothing else, it's certainly a phone call to your underwriter and let them guide you beyond that point.
Yeah,
Um, but yeah,
that's
definitely,
definitely a call the lawyer
yeah,
question right there.
yep.
Yeah.
Call the underwriter, call the lawyer, call everybody, call the insurance company. Make sure everybody knows. Yeah, just don't bury it. Because yeah, that'll just lead to more problems because eventually it'll come to light.
Very true.
Yeah. Great. Another question for you. The title industry has such a huge variation in the size of businesses. You have everything from those tiny little mom and pop shops that are doing just a handful of closings each month to huge multi-state corporations that are processing hundreds and hundreds of transactions a month. Um, can the small people outsource and use a service like yours? Is that feasible for them, or are they stuck doing everything manually?
No, we are quite happy to work both with large providers and with small ones. Um, I don't really know that there's that big of a difference in the user experience between large users and small users. In fact, in a lot of ways, I think we're even more valuable for the small shops than for the big ones because the small ones would never have the resources, to have their own software developers develop
Yeah,
an application for them. Some of the really large users, potentially could. Um,
yeah,
so no, we're happy to work with customers large and small, and in a lot of ways, I think we're especially helpful for those small customers.
that's fantastic. Because yeah, sometimes the small guys really do get left out in the cold with these kind of automation solutions because they're just not built for that occasional use in low volume. So that's
Yeah.
great to know.
The other great thing is that unlike some other types of software, we don't ask you to sign up with a multi-year commitment, and you're not paying us some flat fee per year. You're not paying us so many dollars for every user that you have. Our pricing is all per transaction. So at the end of
That's
the
great.
day, unless you have a state rule that prohibits you from passing through these certain expenses, you can pass these through and in many cases even mark up our expense to your customer. Because at the end of the day, this is a cost of doing business for the sellers and the buyers, and it makes perfect sense that they're going to bear the cost of this regulation.
And that's another one that I've definitely seen some conversation going on in the industry is, what can you charge for the extra time, labor, and expense of providing this service? Have you kind of gotten any input from, state sources as far as what people can and can't do?
Yeah, I have not tried to figure that out
Okay.
across all 50 states. My understanding is that there are different state approaches, some who restrict what you can charge and others that do not, others that just require some kind of notice filing. That's something that really has to be worked out on a state by state basis. So that's why I said, unless your state prevents you from passing through the charges as an economic matter, you can.
Yeah, yeah. So yeah, for all of our viewers, it go and double check your state requirements that dictate, what your pass through charges can and cannot be, because that's going to be kind of your guiding light. And call your underwriters and double check what advice they're giving for your state as to what you can and can't charge for. But I think in most cases, most states, people are going to at least be able to pass through the cost that they're incurring, and whether or not they can mark up is probably going to be a much bigger question mark.
Makes sense.
So, all right. Well, Jonathan, is there any kind of last things that come to mind that you feel like title agents maybe don't know and really should?
I think we kind of have covered the waterfront. For those folks that haven't gotten started getting up to speed, you're late. Get started.
Yeah.
Uh, Come out to our website. We have all kinds of instructional videos as well as written content if you prefer to read, if you prefer to watch. You're also able to use a lot of those videos for your sellers and buyers. You feel free to send people links to those videos on our website at rrereport.com if you need to get someone up to speed real quickly as to what happens. In
Oh,
addition,
that's fantastic.
yeah, inside our system, when you're using it, we have links out to all these different videos. Okay, you're on step number 2 where you have to do da da da. Here's the video explaining exactly what you have to do. And we have a
Nice.
voiceover with a hand showing you each field in the software, how you fill it in, and where you go to get more information. So we've tried to
Oh,
make it as
that's
easy as you possibly can.
yeah, that's fantastic because yeah, that's also, a whole other hurdle for people is great. Not only is there a new rule we have to learn, but there's new technology we have to learn too. So I'm glad that you've really addressed that element as well.
We sure have tried.
All right. Well, Jonathan, thank you so much for being here with me today and answering all of my questions. I think that's really helped shine a light on some of these areas that we all need to be concerned about.
Thank you, Cheryl. We appreciate the opportunity, and we look forward to, answering questions from anyone who'd like to get to know us better. And we'll just watch out there. And we're going to be at a couple of the conventions coming up here in March and April, and looking forward to meeting people face to face at some of those opportunities.
Fantastic. And I will make sure that there's links to your site and your resources in the show notes as well.
Sounds great.